Good afternoon, everyone, and welcome to this live. I'm Johnny. I'm the chief economist analyst in Oakshare. We are today, Monday, October 18. It's a crucial week. We have war. We are in risk of mode, as well as the market is moving in in a very volatile way, and that's affecting especially the gold as well as the dollar index and the oil that's called safe haven. On the other hand, we have the Australian dollar, the euro, the pound, the NZD. So these are weak currencies during tension. Let's jump first to our economic calendar to see what are and what will be the released report for the upcoming week. So for Thursday, we have the let's go for Thursday. We have the unemployment claims that will be released every week. It will affect like the market and then like in a very short term, like just 5 or 10 minutes. As well as I think we had something for Powell. We have the existing home sales at 5 p.m. Beirut time, as well as we have the Fed speaking at 7 p.m. We will check what the content will be for that time. If it's related to the education or the industrial sector, or for like something that's not related to monetary policy, I think that will not affect the market at all. However, if he talked about if he would talk about the monetary policy, if we have a further increase on interest rate, if we are in a soft landing or like on in a hard landing, this if he's hawkish, if he will be dovish, this in this circumstances, it will affect the market. However, I don't think it will affect the market by any move if we have something related other than the monetary policy. Let's jump to our economic calendar. We will start before with the euro dollar. Regarding the euro dollar on the daily time frame, I have my bearish trend line. I will draw now my supports as well as my resistance to see what are my crucial areas. So I have a crucial area here on the 1.5, as well as I have one here. Definitely I can extend it to the left. However, I will be happy to draw only that part. So my favorite scenario for the euro dollar, it's a fall towards the 1.05 psychological level as well as a demand zone. Why? Because my trend line, my bearish trend line, is hitting multiple times, as well as I have here a rejection. And today I had an opportunity on the euro dollar just to sell it. If I we will go later on to a lower time frame to check it and to see it clearly. However, my next target will be down. So on the trend line, my entry point was here. My stop loss was above the previous high, and my take profit was on the 1.05. I have a risky trade. My RRR risk reward ratio is 1.35. So my stop loss is around my stop loss is around uh, 70 pips, and my take profit is about 95 pips. It's a risky trade, but not that much, to be very honest, because my fundamentals are saying I are telling me, like the fundamentals are telling me that I'm in a risk off. I have tension. The euro is weak. However, on the other hand, the dollar is strong. So for me, if I want to go to that trade, my stop loss will be here. It's around 30 pips. It's above the previous high on that candle here. And my take profit will be down on the uh, 1.05 as a first target here. So now my RRR is 2.5, and I think it's a good trade. My second scenario would be any close above the trend line here will reject the 1.6 psychological level as well, and then I will be waiting for a breakout from there. But till now, everything and the combination between the technical as well as the fundamental we apologize for the technical issue. So I was saying that my favorite scenario would be a fall towards the 1.05 psychological level as well as cement zone. My second scenario would be, and that's a far scenario because if I want to combine the technical as well as the fundamentals, I can clearly, like the market is saying to me, that everything is bearish against the euro and against the sorry, everything is bearish against the dollar and against the gold. If I go to a lower time frame to see if I have, so, oh, I have a perfect double top on the 4 hours time frame. Now I can clearly see why the euro is falling. So my neckline is here, my neckline is broken. I had the perfect retest. So I had an opportunity here on the trend line, and then the market gave me another opportunity on the breakout of the neckline. Now my target is 100% hidden. I will be waiting then for another fall towards the 1.0500 psychological. We will go to the Australian dollar. Regarding the Australian dollar, and as we know, the Australian dollar is a weak currency uh, in the market when I have tension. It's absolutely the same analysis um, as the euro. So my trend line, it's here. I had the breakout, a retest, and then the price, it should go up. However, because it's a weak currency, I have tension, and here, honestly, it's a lost trade. So, uh, if someone like went from here to trade it from here, I think it would be he will be on a loss. However, I had another breakout here, but it was a fake breakout. How can I know? The next candle here closes, it's closing below the trend line again, and that's a pure bearish scenario. My fundamentals are saying as well to me that everything is uh, bearish. So till now, if I want to trade the Australian dollar, I will be looking for a short to go short and not to go long. Let's go to a lower time frame to see if I had any opportunity. So as well as like I had a double top as well. So here is my neckline. My neckline is broken with that candle here on the 4 hours time frame. If I go to a lower time frame, I will see where is my entry. However, I might have a head and shoulders on this area due to the fact that this area are very strong, and then my next target would be the 0.63 psychological level on the Australian dollar. However, my second scenario would be any close above the 0.6400 will rise, will let the price go up to 0.65 supply zone as well as psychological level. We will go to the gold, who had an astonishing move on the daily candle. If I want to draw my flag, so here on these areas, on a higher time frame, I can clearly see that I have a perfect flag. So whenever the price breaks one of the channels, so my channel here, it's broken. How can I know? I have a daily close above it and two retests, and that's a pure bullish sign due to the fact that I'm doing my analysis based on price action. So here my here I have a daily close above the channel. I have two retests on the daily time frame, and then the price will go. This is on technical. Technically, I can clearly, can it like, it's a piece of cake. Like it's very clear. I can clearly measure the distance between here and there and project it to the middle of the flag. Like just put it on the beginning of the channel here. So my next target will be the historical level 2067 on the gold. My first target would be the previous high. So no, like my second, so my first target should be that high here, the $2,050 per ounce, and then my second target would be the 2000 around $80 per ounce. Now you would say, like, Johnny, like, you're crazy. How can you do it like this? Technically speaking, that's what I'm saying. Fundamentally speaking, on when I am on risk risk of sentiment, this is also what I can clearly see on the gold. My second scenario would be a close below the 1906, 1905, these zones here, and then I will, like, the next target would be the 1800 again, but that's a far scenario. I think we will be in a pure bullish scenario. So now the price rejected on these areas here on the 1953, and then it rejected on the higher support here on the 1900 around 62, 63, and that's a very strong area for the gold. So now I can see, like, it's rejected. I think we are only in a correction move. So if I go to a lower time frame, like, you can clearly, like, price action analysis is the best. You can clearly see that the price rejected from the support here on the 1940 psychological level. So that's as well, it's a bullish sign. If I had a fake breakout, then then it will close below the 1939 or 38. However, the price is still resisting on these zones, and we are just only, I think we are only in correction. Like, if I want to measure the Fibonacci correction, like, okay, we, like, for that, like, I will check when the price rejected. It rejected around the 78.6, just a bit far. However, I don't have any close below that support, and that's a good sign as well. If I want to the 30-minute time frame, we check if we had, like, opportunities or other opportunities, there's nothing on the 30 minutes time frame as well as I don't see. I had on the 15 minutes time frame, 5 or 6 consecutive candles, consecutive candles on the 15-minute time frame, and then the price reacted with a bullish candle on these areas here, and that's for me, it's a bullish sign on the gold, technically and fundamentally speaking. We will go now to the Dow. Regarding the Dow Jones, so let's remove everything. I have first a bearish trend line, and I can draw it like that. So my support and resistance are as following. I have the 34 area here. It's a very, very, very strong one. So for me, technically speaking, I had 3 opportunities on the Dow just when the price touched these areas here, the combination between the supply zone as well as the trend line, and that's a bearish sign. That's a pure bearish sign for the gold. So now I can what I can see is the following: any close, any daily close below the half of these green candle, this bullish candle here on the 33,835, I will form then an evening star, a perfect evening star, and then the probability of falling is higher. However, I will be waiting, or I will wait for the daily close to check if my analysis is correct or no. Technically speaking, I'm on 75% sure that's the scenario here. Fundamentally speaking, when I have risk of, or when I have tension or war, the Dow Jones is a weak indices. Let's go to the 4 hours time frame because I had something there. Yeah. On the 4 hours time frame, I have a double top. Let's remove this one. My neckline here is broken with the candle. Like if we go to a lower time frame, you can clearly see that, like on the 1 hour time frame, like you can see that my neckline here is broken. I have a retest. It's a small correction, and then the price will fall. Technically speaking, the price will fall. I will measure the distance between the top and the neckline, and I will reject it to the neckline, and my next target will be on the 33,600 something. That's not a signal. We are not giving signal. These are only analysis. So technically speaking, it's bearish. Fundamentally speaking, it's still bearish. Whenever I have a daily close above the trend line on the daily time frame here on these areas here, then I will be looking to go long or to buy on the Dow Jones. However, till now, the only opportunities I can search on the Dow Jones are sellings only. And that's it for the Dow. So everything is bearish. I will be waiting for the close. I can't see, like, whenever the price closes below the half, I might have a retest again for the trend line or for on the neckline here, and then I will go short. My next target, if I want to go on a low on a swing trade, would be below the 33,000 psychological level. We will go now to the oil. So the crude oil inventories released 1 hour ago, and an hour ago were positive for the oil. However, it retests these areas here. For me, I had an Elliott wave on the oil, and I'm now on the which it could be like this the correction wave ABC. However, because these like my waves here, the impulse and the correction move are big and took like days to be formed, I can see that I might have uh, this scenario, or the scenario that I will give him a higher probability, it's that the price will form the A, it will reject to the B, and then because I'm also on a risk off and I have tension, and the oil, if you remember, like the war between Russia and Ukraine, we went to the $122 per barrel here on the beginning of 2022. So I might have like the same scenario here. Why not? Because history repeats itself. So if I want to measure the correction of wave B, let's check it together. So I'm around 50. It's it's the support between the 50 and the 61.8. We'll go to a lower time frame. You can see like the gap is was automatically uh, filled. Yeah, it was 100% filled. However, I'm now I had a perfect flag here on the 4 hours time frame. It was a perfect trade. On the 1 hour time frame, oh, okay. So technically speaking, I might have also a head and shoulders. Whenever I have any close on the 30 minutes or the 1 hour time frame below the 86.70, and then the price will fall again towards the 85. My second scenario would be any break of the 88.30 here the supply zone, then I will be looking for a retest of these areas here and then a rise towards the 90 or the 92, or I can just like hit the top again. So that was everything for today. We'll see you on Friday at 6 p.m. Beirut time. It was Johnny. I hold the position of Chief Economic Analyst at Oakshire. We'll see you on Friday, God's will. Have a nice have